So this is Forex trading using a market structure with no indicator needed. This concept of trading Forex without an indicator technically involves understanding of the structure of market. Understanding the structure of market, it's like in the field of investigation, it's like doing more like a forensic work. You need to look back for you to understand market structure. You need to look back in time. The reason is because demand and supply is what controls the market. So the concept of demand and supply is technically tied to your ability to see break of structure, ability to see retest, and ability to know the phase of the market. Is the market in a buying phase or in a selling phase? These are things that are key and critical for you to understand. You know, so this is my SR level. SR means support become resistance and break of structure, and ROS means resistance becomes support and break of structure. Now we have an interchange between SR and ROS, and there it gets interesting. So the moment you see that interchange, then you are now allowed to draw your trend line. A trend line could be horizontal, trend line could be ascending, trend line could be descending. And there are cases that a trend line become a channel, especially when we're able to make a roof and a floor out of it. For this now, this is an ascending trend line, ATL. So I want to maintain as minimal line as possible. And this is your buy floor. Based on the structure of the market, the market has respected the ascending trend line, which on so many occasions, guided price and uptrend. Forex trading is very simple. If you understand demand and supply, if you understand demand and supply, and the next thing you need to do is you look into fundamental analysis. In fundamental analysis, you look at government economic print, you look at interest rate, you look at interest rate differential. Then you jump into the 10-year bond yield. You see, trading and analyzing the financial market is not a Ponzi scheme. And it's not a get rich quick scheme too. It requires a knowledge, it requires years of practice and liquidity to scale. You need lots of money to scale as a Forex trader. You see, as a good Forex trader, there's no amount of money you cannot make. I'm very much aware of this, and that is why I'm into it fully. So I'm telling you for free, there is no amount of money you cannot make. And there is no amount of money too, as a Forex trader, you cannot destroy. So even if they give you $1 billion, you could squander it if you have very poor emotional drive. So you need a strong emotional balance between loss and gain. Because there are going to be days that the market will actually hit you and take your stop loss. Like, it's not like you're a bad person, or it's not like you're a bad trader, or it's not like you've not got strategy. No, it is just that day. That day is not good for you. So if you choose the wrong day to trade, the chances are very high you could lose your liquidity. Yes. So pray never to be in a bad day. Just it's part of your trading prayer that you don't ever want to be in a bad day. Just pray about that. Because if you ever find yourself in a bad day, you're going to have a losing trade. Because those days are days that analysis does not count. So no matter your plot, the market is not going to respect it. No matter your plot, the market is not going to respect it. So there are going to be days like that. So I think we'll settle with three important key areas where expect price to return, and I do hope that price will return into this demand floor on this area for a potential buy opportunity. This is a nice buy zone. So market structure is very important, and as a trader, you need to have a very strong emotional balance. And this is the true structure of the market at the moment. And you have seen the market have leveraged on the roof and on the floor. And from the roof, that's my supply roof. And this is my demand floor. Now, one thing I want you to do is go check the the 10-year bond yield. Go and check the 10-year bond yield and see what the 10-year bond yield have done on each of these days of sales and buy. This is for clarity. You're only doing so for the purpose of clarity. So if you go check it, maybe you will draw some conclusion between the 10-year bond yield, the the interest rate, and the dollar index. So this is what we have. And you can see here the market has opened in a gap after breaking a structure, and it came here to retest it. And another retest, another retest. So on technical, to be a smart trader, what you need is a potential breakout to the roof so that you continue upward, or the market gives you a breakdown where it comes down here ultimately. But the strategy is that market will not just move just like that. It has to show you certain break of structure on intraday for you to be aware that the market will swing. So the parameter for upswing lies on this structure. And it feels good to see that our strategy addresses the market in a way that is very transparent, in a way that makes forex trading very simple for everyone to understand. That is my goal, to make forex trading very simple for every person to understand. Yes. So I want to be that guy who makes forex very simple. Forex trading is very very simple. Forex trading is very very simple. When I say forex trading is simple, believe it or not, forex trading is very simple. You understand? Forex trading is very very simple. Now let's look at the structure here so that we will look at the simplicity of trading forex. Now, don't buy, don't sell without knowing the performance of the dollar index, without knowing the performance of the 10-year bond yield, without knowing the performance of the general market behavior. You need to know at the moment, is the market buying or is the market selling? If the market is buying, what is prompting the buy? If the market is selling, what is prompting the sell? Because for every time you take a trading decision, you are making a money move. And those who come out victorious are those who make the right money move. And forex trading is very simple, you know. And my strategy is based on allowing the market to create a structure. It's going to take a while. It's going to take a while. Then ability to multi-chart. Multi-chart means that you are going to chart multiple brokers. You see, on gold, I've chat over 10 brokers. See, every time I chat any broker, I get different results, I get different perspective, I get different chart entirely. The reason is because there is what brokers do, close of candle manipulation. Close of candle manipulation is a very big tool you need in order to be a successful market structure trader. A market structure trader looks out for candle closes and wants to make a perfect cross, keeping in mind SRRS interchange and being able to find out a broken structure and look out for retest. Because these are the four things you need. They move in sequence. You need to see your RS, you need to see your SR, you need to see your breakout, you need to see your retest and subsequent SR interchange. The chain continues. Then in overall, you look at for the trend. What trend has the market developed? Do we have multiples of ascending trend line or multiples of descending trend line or horizontal structures? Then you bring in your Fibonacci. Fibonacci strategy is also one of the things we use from time to time. I use Fibonacci occasionally. Occasionally, I do use Fibonacci, not all the time. But my concept of market structure, is completely devoid of any form of indicator. But regardless, I use indicators as well. I want to be very honest with you. I do use indicators. Like indicator saved me today on 15 minutes in good, being able to spot a 3,398 sell idea using a SMA 200 on 15-minute time frame. It provided me that sell structure which aligned with the supply roof. So it's also very important that we put it in our strategy. And my indicator strategy is a combination of SMA EMA. So what I do normally is when I put SMA EMA, then after I've looked at it on multiple time frame, then I'm looking at it in alignment. I'm looking at it in alignment with my structure. So if I see the alignment after seeing that, now I can tell you now, I'm seeing a potential breakout and I'm seeing a potential buy zone on breakout from an ascending trend line. Then you go back and close it. Yes, I'm done with it. So when I need it, I turn it on again. Normally, the way I use on multiple time frame. So on multiple time frame, it gives me a clear, trading bias that at the end of it, it works. It works perfectly. I once scrutinized it, but when I realized that, look, indicators work, and you are just a newbie in this space. I mean, so you can't throw everything to the floor. So the most important thing is having a strategy that will enable you to win and not to discredit any tool or any instrument. So that was why I brought in everything, every instrument available on this trading chart to public notice. So I do hope that this video helps your journey and you anchor on our structure. And we have seen what market is doing here after that break of structure, series of consolidation, and you can see the market has rejected that level. So for we to talk of a further upswing, of course, we need to break out from this structure. You need an outright breakout from that structure, from this purple structure, an outright breakout, and it has to be sustained before we can now go up. Yes. So from the downside, a breakout from here. And one more thing, it's you turn on your line chart and you will see that you've got here a breakout structure. Here is a breakout structure at this level. Look at that structure over there. That's a supply roof and another supply roof. So let's look at it on 3 hours and see if it makes sense. If it doesn't, we'll leave it. Okay, good. I think at this level, we got a break and retest at this level. We have here as a supply roof, we have here as a demand floor, breakout structure, turn here to a supply roof, and the market sold. It all telling us that there is a possibility of a potential breakout. So while we are waiting that, we need to stay cautious and allow the market do its thing. So if the market is pulling down, I have I have a structure at this level where I think the market has created a beautiful structure. and it might want to come inside. It might want to come inside that structure, most likely. And yes, so this is what I see. And oftentimes, what we see in the market is what the market does. So it is based on experience, it's based on mastery, and it's based on repetition. So we do this every day, and that was what has enabled us to see price movement. So let's stop here, and I want to let you know that forex trading is very simple, and to learn forex trading is very simple. Also, all you need is consistency in education, consistency in learning, and focus more on learning. The idea of money, money, money all the time. Yes, forex money is okay. It's okay to aspire to make forex money. That's a quick money, as long as I know. But the most important thing, be grounded fundamentally. So once you have that fundamental knowledge, then there is no amount of knowledge money you cannot make. So I encourage you to focus more on fundamental analysis and have a strategy. So, and even if you are copying trade, make sure you know what you are copying. A lot of times people copy blindly. You copy someone without knowing what you are copying. You need to know what you are copying. So even if you are following your mentor, you are copying your mentor, you need to know what he's doing. You need to know what she's doing. So forex trading is very simple. Like you see the way I explain it here to you. So you have limited trades. You buy on the floor, you buy on the floor, you buy on the floor, you buy on the floor. Here we have a clean break of structure. And I also want to acknowledge that price action at that level. I want to acknowledge it. And now we end up having a series of deity charts. But that's okay. That's okay. So this is a good level in case market pulls out around 42. Around 42 is not bad. Around 42 is not bad. The reason is because I want a retest into this weak rejection on 3 hours. And also we have a rejection at this level on 3 hours. We have a rejection at this level on 3 hours. We have a rejection at this level on 3 hours. So it has automatically turned here to a demand floor. And that was when price broke away from here. It turned here. So these 2 points was what locked the price. The market was locked from those two key levels. Got the market locked here, and the market got locked here. Yes, it locked it as supply and unlocked it here as demand before break of structure. After we have sold, we broke the supply roof, turned it to demand, making here an SR and making that a horizontal structure, a valid demand floor. So I also want to put a shade on it. So if price returns there, reduce your risk, manage your risk properly, and enter a buy at that level. I wish you good luck. Forex is very simple. I'm your guy, Shavyfxhub. Thank you.